Welcome. We are at another Tuesday Home Finance Hacks. And so in this broadcast, we're actually going to be talking about how you should shop for a mortgage. There are a lot of things that many people get wrong and it ends up costing them lots of money. I'm talking thousands of dollars because they don't know how to shop for a mortgage. So we're going to be talking about how you should be shopping for a mortgage, the things that you need to consider. And we're going to break it down into three different things. Most people just shop the interest rate, and that's what most people focus on. But I'm actually going to save that for last because it's not the most important thing. So we're going to start with something that's a little bit more important than the interest rate, and that is the loan program. The loan program that you are actually going to need to put you in the best position along your home ownership journey, depending upon what your plans are when you get ready to purchase that home. So with the loan program, it's going to depend upon your particular situation and where you're looking to purchase. So for example, let's say that if you're a veteran, I'll knock out the easy one first. You should be absolutely looking at utilizing your VA home loan benefits to purchase a home and get your home ownership journey started, because the VA home loan is, in my opinion, the best loan out there. But I think if you look at the details of the VA home loan, you'll see why it's the best home loan that's out there for people looking to purchase a home as a primary residence. And you're talking about no down payment required, no mortgage insurance required, no purchase price limit if you have full eligibility. There's no FICO credit score limit. There are so many benefits. There's also a limit on how much you as a veteran can pay in closing costs. So for so many reasons, I'm not going to go into all of them here, but if you're a veteran, you want to go with some place that not only offers VA home loans, but also you want to be with a loan officer that is very well versed in how to originate a VA home loan. And the reason is because there are some things that are different about VA home loans that don't apply to an FHA loan or a conventional loan. So you want to make sure that you are with a loan officer who knows how to calculate residual income. VA home loans are the only loan product out there that calculates residual income. So you want to make sure you are with a loan officer that knows how to calculate that, and a loan officer that knows how to get you everything that you're supposed to be getting, making sure that everything's lining up in the right columns. But moving on from the VA, as you can tell, as a veteran, I'm a huge fan of the VA home loan. But moving on from there, you want to make sure that you're with a mortgage company rather that offers the programs that you need, whether it's an FHA, a conventional loan. Maybe you're purchasing in the suburbs or the outer suburbs in an area or in a rural area that is considered USDA eligible. So if you're purchasing in a USDA eligible area, maybe that's an option for you, but it's all going to depend upon what your finances look like, because there are income restrictions with USDA homes, in addition to the geographical restrictions as well. So you want to make sure that depending upon your situation, you're getting with a loan officer that offers the products that are going to be best for you, because if USDA would be best for you, but you go with a lender that only offers FHA and conventional or VA, then you're going to kind of be losing out right there. And that could end up costing you thousands of dollars on the front end, because now you might have down payment or additional closing costs that you're going to have to pay as well. So program first, you want to make sure that you're getting with a loan officer or a lender that's going to have the right program that's going to fit best for your situation and where it is that you're trying to go. If you're trying to purchase an investment property, you want to go with someone that's got a good DSCR program, which is a debt service coverage ratio program, to help you get that investment property at hopefully a lower interest rate than what you would if you were to go through a straight conventional. But there are pluses and minuses with every program. But if you're maybe have a unique income situation and you need to get qualified based off of your bank statements, you need to go with a lender that offers a good bank statement program. Maybe you're going with a lender that offers a profit and loss statement program or a 1099 program. There's so many programs out there. You need to make sure that you get with the lender that's going to that has the programs to best pair you with for your financial situation and your future plans as well. So that's the first thing, is making sure you get with the lender that has the best program. Second to that, actually, it's not going to be interest rate. It's actually going to be the cost, the upfront cost. So one of the things that, and this will actually play into interest rate, and you'll see why in just a moment. But when it comes to purchasing a home, obviously there are closing costs and down payment, which are the two biggest expenses. Down payment being the amount that you have to put down on the principal amount that you're purchasing that home at. And then the closing cost being everything else, which is your taxes, your insurance, your attorney fees, your title fees, your lender fees, All of that stuff is what I'm wrapping into closing costs. So when you are looking at your closing costs, you want to really look at those lender fees. How much are they charging you in an origination fee? Do they charge you an origination fee? Some lenders do, some don't. If they do, that doesn't necessarily mean it's a bad thing. But if they don't, that doesn't necessarily mean it's a good thing either, because it could be other areas where they're going to be charging you at to make up for that as well. So you want to make sure that you look at, are you charging an origination fee? And you want to look at another charge, which a lot of people don't know about or they don't understand it. And that charge is discount points. Discount points is the price that you pay for your interest rate. So let's say, for example, if you wanted to get a 7% interest rate and lender A says, I can get you a 7% interest rate. Lender B says, I can get you a 7% interest rate. Those 7% interest rates, even though it's the same rate, might not cost the same. Lender A might be charging you $1,000 to get that 7% interest rate. Lender B might be charging you $4,000 to get that 7% interest rate. That's key and something that you want to know about. But that also plays a factor when the interest rates are different. Let's say, for example, lender A says, I can get you a 7% interest rate. Lender B says, I can get you a 6% interest rate. And so you're like, oh, I'm obviously going to choose the lower interest rate. But what if that 6% interest rate is going to cost you $12,000 and the 7% is not going to cost you anything? Do you still want to pay an additional $12,000 up front just to save $200 a month more on your monthly mortgage payment? Briefly, I'm not going to go into whether or not that's a good decision in this broadcast, because I actually did a video on that recently last week. And so go look at the videos that I released last week and you will actually see how you can calculate whether or not it's a good idea for you to pay all of that money up front just to get a lower interest rate. I go into all the details and I show you in real time how you can calculate whether or not it's a good idea for you to pay all of that money to get your interest rate lower. But that's a cost that you want to consider. So you might have a lender that's not charging you any money in origination fees, but they're charging you a lot of money in discount points. And that might be the difference maker for them. So you want to make sure it's like, oh, they're not charging origination fees, but if for the interest rate, they're charging you $8,000, $10,000, $12,000, whereas for the same interest rate, another lender is not charging you anything, or they're charging you half as much or a fraction of the cost that this lender is charging you, then that's where you need to be comparing, is which lender you really want to go with. So those are the two things. We'll get to the third in just a moment. You already know what it is, but to recap on these two things, the first thing is making sure that they have the program that's going to work best for you. You want to have a program and a loan officer that is well versed in that program. So if your loan officer says, I do everything, they don't do anything wonderfully. If they do everything mediocre or, subpar or maybe par, but they don't do everything great, because there is so much in the lending world, you can't do everything great. So you really want to find a loan officer that can really tell you about the benefits of the program based on your financial situation and why they think it is the best program that you should be taking. So the program, get with the loan officer that's going to have the program that's going to work best for you. And you might not know all the programs, so you really need to ask them questions. Ask the loan officer, why is the FHA loan the best loan that I should be going with instead of a conventional? Why is the VA loan the best loan I should be going with instead of an FHA or a USDA? Why should I go with a FHA instead of a USDA loan? Or why is it I can't go with FHA and you're telling me I need to go with a bank statement loan? And how much is that going to cost me? You need to ask a lot of questions, because that's going to educate you to know what's the best route for you to take. And then you can start knowing, okay, I need to go with this mortgage lender because they offer the program that's actually going to be best for me. After that, now you're shopping based on, because of all the lenders that offer the program that you really need, now you're saying, okay, well, which lender is going to cost more? So now this is when you're getting into comparing, do you have origination charges? How much are the discount points for the interest rates that you're offering? That's when you're getting into that. Which brings me to the third thing, the interest rate. Obviously, some lenders are going to offer higher interest rates than others, but it's not always advantageous for you to take that higher interest rate. In some instances, it's actually going to be better for you to take the lower interest rate and look to refinance later. How do you know whether or not you should be taking the higher or the lower rate? Check out that video that I just told you about that I released last week, where I talk about it, and I go in real time, giving you a real time demonstration of how you can determine for yourself whether or not one interest rate is better than another based on how much they're actually charging you up front. Now, if one lender is saying that they can get you a 6% interest rate at no cost, and another lender is saying they can get you a 7% interest rate at no cost, then yeah, the 6% interest rate 99 times out of 100 is probably going to be the better option for you, because they don't cost, neither of them are going to cost you anything additional. So why not take the lower interest rate instead of taking a higher interest rate? But a lot of interest rates will have costs associated, and this is where you want to really dig in and see how much are you charging me in discount points, and what's the difference that these interest rates are actually making. Because a 7% interest rate and maybe a 6 3/4% interest rate might be saving you $50. Maybe it's saving you a little bit more, a little bit less, but a 7% interest rate and a 6% interest rate might be saving you $200. So you really want to look at how much am I actually saving, and what is it actually costing me to get those savings, and how much is it going to be before I break even? How long till I get to that break even point? If you don't know what I'm talking about with the break even point, go watch the video from last week. I'm continuing to plug this video because it's going to answer all of those questions for you. It's really, really good. It's really going to help you understand interest rates and how you can calculate for yourself the interest rate that you really should be taking. So just to rehash these three things really quick, you've got 1, do they have the program that you need? 2, what are the costs that they're actually charging you? What are the costs that lenders charging you? Origination fees, discount points. I keep harping on those two. Those aren't the only two. Lenders also may charge processing fees. They may also charge administrative fees or administration fees. They may charge underwriting fees. But typically those are not varying too far in one way or the other from one lender to the next. What really does make a difference are the origination fees and the discount points. That's what can really hit your pocket hard. And so you want to see how much they're charging you. And then the third one, obviously, what are the interest rates that they're offering? And you combine all of that together, and that's how you shop mortgage lenders. That's how you determine which lender you're going to go with. You don't just go with, oh, they're offering the lower rate, so I'm going to go with them, because you can go with the lower rate and end up paying thousands of dollars more and not even hit your break-even point for another 4 or 5 years. So you could really push your timeline out. And if you were to refinance before that 4 or 5 year break-even point, you could actually end up losing money on this transaction by taking the lower interest rate. If you have no idea what I'm talking about, you got it. Go watch the video from last week that I released where I go through all of this stuff on interest rates. But make sure that you shop your mortgage lenders the right way, looking at programs they offer, how much it's going to cost you to go with that lender in closing costs, and the interest rates that they offer as well. So that's what I have for you. Thank you for taking the time to tune in. As always, make sure you check back on Fridays, because every Friday I'm dropping an episode of Home Finance, or not Home Finance. This is Home Finance Hacks. I'm dropping an episode of the Greatest Asset Community Podcast. So every Friday, dropping another episode of the Greatest Asset Community Podcast. Make sure you tune in, and then check back next week, Tuesday, 7 p.m. Eastern time, right here, Home Finance Hacks. I'm giving you the tips, the tools, the tactics to help you save hundreds of dollars a month, thousands of dollars a year, tens of thousands of dollars when you go and purchase that home, especially as a first-time home buyer. So thank you for taking the time to tune in. Take care, be blessed, and we'll see you next week.